So when you're trading, it is extremely important to draw support and resistance levels the same every time. Because in trading, you want to be consistent over the long run. So for me, the way I draw levels is when the market touches an area twice, I then consider that as a level, either a resistance level on the highs or on the lows, I consider that a support level. And then when the market comes and touches that area a third time, I look for a reversal off of that. So this is just a simple way to stay consistent when drawing support and resistance. But what are some key factors to actually be successful when you're actually trading using support or resistance? Now, the first thing is you don't want to focus on every swing in the market. If you just go with every time the market touches the same price every time, you are going to have a ton of different levels everywhere that are not going to hold up every time. And so if you try and focus on every single level that the market makes, your chart will end up looking like this. There will just be too many lines everywhere. And when it comes to trading, you really want to be focused on the key important levels so you can stay consistent when trading. In trading, if you overtrade, you end up losing money. And so you really need to focus on the key areas where the market is reversing. And how you do that is sticking to the extremes of the swings in the market. And once you learn to do that, you will start to realize that you can be a lot more consistent and predictable when you pick your levels, and that they will be stronger and more consistent at reversing the market. Now, the second big key to drawing levels that actually hold is using a larger time frame than what you're actually trading on. So for me, I trade using a 1-minute chart, but I draw my levels on a 15-minute chart. So what this does is it amplifies you sticking to the extreme and more important levels in the market. And so instead of focusing on those smaller support and resistance levels that are unlikely to hold, you are actually focusing on the key areas in the market that are more likely to reverse, because the larger time frame that you use, the bigger and more important the support and resistance levels will be. Now, you don't want to go too big because then the market will take forever to get to those levels. But I have found using a 15-minute chart for trading on a 1-minute chart to be very successful in finding reversal levels that hold very consistently. And so another important thing when drawing support and resistance levels is not using a specific line, because you don't know where the market is going to reverse. It will often come close to support level before reversing. And so if you drew your resistance level off this high up here and you were waiting for the market to come up and touch this again, well, these reversals right here, you would have missed out on this trade for the market going back lower because the market never got up to this resistance level up here. And so what you want to do is you want to create support and resistance zones. And so all I do for those is I just create a box with the areas where the market had its 2 initial reversals that I confirm my levels off of. And so for this resistance level up here, the market came up, hit this area, came back down, hit this area again, and then I draw my level off of that. And so what I'll look for is when the market comes up and hits this area again, that's when I'll bet for the market to go lower and I can take trades off of that. Now, how you draw your box is really dependent on how aggressive you want to be. I always like to match where the exact high is of the 2 swings. And then where I actually go with the bottom of the box can really depend on what the market is doing. If it's reversing down here a bunch, then I'll actually draw the box a little bit further down because, well, these are key areas that I want to know that the market has reversed beforehand. So when you take that and expand that across, you will see the market came and touched this area a couple times and you were able to get some good reversal trades off of that zone. And on the flip side, for the support, you can do that as well down here. And you can see that the market reversed off of this area twice as well, producing really good trades. And so this is how I play support and resistance levels while I'm reading the market. And so when the market gets to one of these levels, you want to go into a 1-minute chart and look for a confirmation of it reversing. And so let me show you what that actually looks like in real time using a recording of a live trade I took using this method. And so first off, here you can see here is that zone that I've drawn from a larger time frame chart. And now I am on a 1 minute chart, and that's where I'm looking for my actual trade entry and the confirmation to get in the trade. And so here I have waited for the market to get up to this level, and then it has produced a short signal telling me that the market is potentially going to reject this level and that I should get in on a trade betting that the market is going to go lower here. And so what that confirmation is the market producing a couple choppy bars here, and then it has a nice reversal of these two red bars. And then at that point, I just get in. And on this trade, I was looking for 2 times my risk. So my profit is going to be double my risk here. And so what that does is I don't have to be right every time. I can be wrong some of the time, and I can still be consistently profitable over the long run, even if I'm right 50% of the time. And so that's the important thing of drawing these levels at levels where the market is more likely to reverse, is that it increases your likelihood of being correct. And so I'll just zoom forwards and show you how this plays out. Is the market then sells off pretty quickly into my favor, and I just exit the trade as it hits my profit target. And I can just move on to waiting till the market gets to a level again. And so what that allows me to do is it allows you to be patient. And so that's another huge thing when it comes to trading, is being patient, because I have done this in the past where I really want to get in the market and I see all this stuff going on and I want to take trades, and you can see that can easily happen when the market looks like this. This market before this was just kind of all over the place and really back and forth. And that can cause you to get in a lot and just lose money. And what focusing on these larger levels does is it allows you to tune out this noise and wait for the market to move up into one of your levels where the market is highly likely to reverse. And then you can play a trade from there where it is more likely that you can be profitable consistently. And so when we get up to this level again, we can look to bet that the market is going to hold this level again. And now why we can do that is because the market has some really solid selling here, signified by these multiple big red bars. And that is because that is showing you that there are bigger traders and bigger players coming in, betting that we are going to hold this level and that it is more likely that the market is going to go down. And so we can bet that, okay, if we see another short signal to bet that the market is going to go lower, we can get in on the market again when that happens. And so here, that signal is that the market breaks this little uptrend that it is in. And that will just signify that the market is potentially going lower. And so once we have that, you can see we have that confirmation by this big red bar. I get in on the trade and just put my stop above the high, because the idea is that if this market breaks through the high up here, well, this level is probably not going to hold, and I just want to get out of the trade. And then on the profit side, we're just going for 2 times our risk again. And so that gets us out down here, which is a really good spot because that's where the market has been chopping around. And so this is what I do in my trading, is I just focus on these levels of support and resistance. And you can see that it can really simplify trading, and having a simple trading strategy is what will make you a profitable trader. There are so many people that try and make trading really complicated with a lot of indicators or a lot of different strategies. But when it comes to trading, simple is always better, because the market is so complicated to begin with that you really need a simple strategy so you can stick to things consistently. And I found that just trading reversals off of support and resistance is what works for me very well. You can see I really don't have any indicators on the screen. I really only look at those major support and resistance levels that I draw off of a larger time frame chart, and then the patterns that the candlesticks produce. And generally all those are is, did the market chop a little, and when did it produce a large rejection bar confirming that the market is going to reverse off of that level. That is just something that I can consistently repeat every day that allows me to consistently profit in the market. And so this trade just works out really well in my favor, and it was great that I was able to actually profit twice off of this. I was able to capture this move here, and then I was also able to capture this move down here as well. And so that ended up putting me up $500 on the day, which is a great profit when it comes to trading. Now, of course, the market can move lower, and that's okay that I missed out on some of that profit because, again, you want to have a plan that you're consistently sticking to when it comes to trading. So to show you another quick example of one of these levels is here we have another day where the market opened and went to one of our levels. And again, we don't have to care about what it's doing in here. All we have to do is sit and wait for it to come to one of our blue boxes that we have already predetermined before the market has even opened. And so when it gets to one of those levels, we can look for a reversal pattern. And so for this instance, that reversal pattern is a double bottom. The market comes down here, hits this once, bounces, showing some of that strength, showing that some buyers are coming in, and then sells off again and bounces again. And so that is a really strong signal because it is showing a micro reversal pattern of this double bottom, and it is lining up with the zone that we have already predetermined that the market is likely to reverse at. And so when I see this double bottom and I see that the market is potentially bouncing here and it's starting to produce a doji here and a bull bar here and it's showing some strength, I want to get in when it breaks up higher above one of these bars or it produces a really big green bullish bar. And so you can see here it makes that green bullish bar, and so I get into the trade and I put my stop again below the low here because the idea is I think this double bottom is going to hold and we're going to go up. And if it decides to not and it sells off, that's totally fine. These levels aren't going to work every time, but the idea is that with our good risk reward ratio of going for more than we lose, we don't have to be right every time to still consistently make money. And so letting this play out is the market does what I was looking at for it to do, and it works out pretty quickly, and it just shoots up back up to our profit. And another key is that the market sold off really well here, and if it's going to reverse, it'll probably come back up to this resistance level that we have potentially up here. Now, this isn't necessarily a resistance level that I want to trade at, but I want to be aware that the market did reverse from here, and so it's a good idea to get out before or at that area. And so thankfully the market does move up really quickly to there, and I'm able to make a nice 350 on that trade. And then the market does end up petering out and having a pullback there. And so I ended up pretty much getting out at the high of that swing. If I just zoom here a little bit forwards, it did end up reversing back down off of that. Now, it's okay that we don't get this move down here. Again, we're focusing on those larger reversal zones because those are the areas of higher probability that it's going to reverse. If we try and catch every reversal from these random levels, again, our chart's going to look like what I was showing in the beginning, where there's just levels all over the chart and you won't know which one is strong and which one isn't. Paying close attention to these larger levels is what gives you that higher probability that the market is going to reverse off of those levels. So hopefully this video on support and resistance was really helpful in showing you how to actually trade using these levels. If you want more information, definitely check out my other videos or look at the links in the description below.